Welcome back to Pass the Balance Sheet. In the last episode, we talked about why this podcast exists, because so many of the hardest parts of business don't show up on paper. Today, we want to start with something that might sound counterintuitive, especially coming from people who live in the numbers. Most of the time, the balance sheet and the profit and loss statements aren't the problem. When business owners feel stuck, overwhelmed, or uneasy, the instinct is often to blame the financials. My books are a mess. I don't understand my numbers. Once I fix the reports, things will feel better. But what we've seen over and over again is that the numbers are usually just reflecting something deeper. They're surfacing decisions that haven't been made, tension that's been avoided, growth that's outpaced structure. The balance sheet and profit and loss aren't causing discomfort, they're revealing it. And when we treat the numbers like the enemy, we miss what they're actually trying to tell us.
And I think that's where a lot of people get stuck because when something feels heavy or confusing, it's natural to want something specific to blame. The balance sheet and the P&L become that thing. It feels safer to say, I just need better reports than to say, I don't know if this business still fits the season I'm in. Or I'm scared to look closely because I don't know what I'll have to change. Numbers don't create those feelings. They bring them to the surface. And that's uncomfortable, especially when you're carrying responsibility for employees, clients, and your family. So, this conversation isn't about dismissing financials. It's about understanding why they feel so charged and what's actually underneath that reaction.
So, before we get into the meat and potatoes of this conversation, I think it's important to explain what a balance sheet is, what a profit and loss statement are, and how they're different and why they also marry well together. So, the balance sheet is a snapshot of your business at a single point in time. It shows what you own, which are your assets, what you owe, which are your liabilities, and what's left over, also known as equity. Assets are things like cash, receivables, inventory, equipment. They can be long term or short term. Long term is typically anything over a year, short term is typically anything under a year. Liabilities are things like loans, credit cards, payables. Equity is the owner's stake in the business. If the balance sheet is clean and reconciled, it tells you whether your business is financially stable and structured properly. It answers the questions: what is the financial position of the company right now? If we turn to the P&L or the profit and loss statement, it shows performance over a period of time, usually a month, a quarter, or a year. It tracks revenue, expenses, and the resulting profit or loss. Revenue is what you've earned. Think of that as your top line number. What did the business bring in terms of dollars? Next is your expenses, what it costs to operate the business, things like utilities, payroll, office supplies. And then you have your net profit. That's everything that's left over, also called your bottom line. The P&L answers the questions like, is the business actually making money? In simple terms, the balance sheet shows health and the P&L shows performance. So now that we know the difference between the two, how they come together, let's dive into a conversation. This is where we turn it over to you. And a question that comes up very often for me in businesses that I work with are understanding the difference between information and interpretation. So, do you want to take the floor and talk about the differences and how those come up in conversations?
Absolutely. I will take the angle of works in progress, jobs in progress. So let's kind of simplify things for our audience to begin with. You know, as you mentioned, the P&L tells us how are we performing. So typically on a monthly basis, we take a look at, you know, how did we do the previous month. We have our revenues that have come in and we have expenses that have come in during that period, and the difference between them, you know, is our net profit. However, things are time is an interesting aspect of accounting. There is never really a true end. As long as the business is still active, there is really never a full picture that you're looking at. And this really comes into play, the complexity of it really comes into play in construction projects, in a lot of builder projects, and specifically projects that last over a span of time. So not just, nicely fit into that month that you're looking. You might be working on a project that spans over a year, and the importance of understanding how you are doing before that project ends is literally can make or break your business. And this is where I want to kind of talk about the perception and actual information, and how important it is to track the full picture. Um, again, if we're talking about construction jobs, let's get into flooring. I've I've worked in the flooring industry in one of my past lives, and um, the, so many different layers to the subcontract industry that I will definitely have an opportunity to talk on in future conversations. But essentially, let's say I'm a flooring business and I am contracting out my services to our local college here, CSU. And let's say I am working on one of their fraternities there. Um, when I say I have landed a contract, let's say the contract is 500K, this means this is 500K in revenues that I will recognize on my income statement in the revenue section of the report. This is just one variable. This is not what I will be bringing home. This that 500K um, includes in it all the costs. When I created that bid and when I offered 500K to CSU, I did my math. I created a bid that took all the costs that I will need to make this project, and I not only marked it up. I want to bring in profit, obviously, bottom line, but I also have to remember that there is overhead in a business as well. So it is not just covering my immediate costs of what does it take to bring this service or this product to CSU. It is how much should I be asking for it to cover these direct costs, but also to cover a portion of the overhead of my employees, of the people in the back office, of all the other components that carry this business. So back to our example here. So we have this 500K project that we've landed, but it's going to take a span it's going to take us a year to complete. And progress billing is a very frequent way of working through these jobs in this industry. So essentially, you work partially, monthly. You assess what work you have completed, and you charge your customer that progress billing. So if you completed 20% of your job, you are billing them for 20% of their revenues. So that's kind of how you keep the project moving forward. But here is kind of where it can be deceiving. And this is a little trick that I've seen our project managers pull, where everything was going fine, seemingly fine, as we're looking at how the jobs are going. But in the end, once we get to the end, we find out that it's a loser. So how can this be when every single month, we're showing profitability, we're showing the revenues that support the costs in that period. But then how is it that when we get to the end of the project, we look at the whole picture and we find out that it's a loser? Well, this is where there's a little bit of information hidden with progress billing. Is you are only kind of boxed in. You are only looking at that specific period that you are billing. And unless you have the right reports and the right data telling you okay, you've completed this part, but you have blown through your entire labor budget and you still have 6 months worth of costs that you're going to pay out. That is not necessarily seen unless you are looking at several reports at once to kind of understand the full picture of how that job is going. And this is where I've seen a lot of surprises coming in, well, seemingly the P&L is telling us we're profitable, but somehow cash is drying out. And then as you dig deeper and as you're kind of looking at the various components into why your cash is drying out, you're finding out, oh, okay, this job is not being managed well. This job is actually losing us money. And
Mhm.
so that is one way that interpretation of what you're seeing can be misleading if you don't have all the right data in front of you.
I think that's super helpful. You said a couple things that I want to touch on in response. So I totally agree with you on the progress billing side of things. We actually, in my personal life, we just put a pool um, into our backyard, and part of ours was
Nice.
built on progress billing, right? And to your point, we knew the total cost of the pool. They didn't want to wait until the end to get paid. We didn't want to pay it fully up front, and so a part of our contract was payments based on performance. And so as soon as they finished excavation, there was a payment that was made. As soon as the plaster was installed, there was a payment that was made. And so you kind of have these check in points of, are you actually performing on your contract? And am I performing on the contract that I agreed on? And you can relate that into the business world. A lot of it you see in cost accounting, which I'm also very familiar with. But to your point of it can get a little messy. In my realm of manufacturing, what we had to do was you had to keep a separate spreadsheet on the project because you're capturing the actualities in the financials within the balance sheet and the P&L, but you're capturing the holistic picture in a separate spreadsheet. So you can say, January, we did really good and we were working on this project. February, we're in the negative. We're still working on this project. And that's where that tertiary kind of non official report comes in to say, well, let's look at this holistically and look at the project holistically. The other thing that we're talking about here is information versus interpretation. And because we both have a passion to speak to not only business leaders, but also those that are up and coming in their career, I think it's important to note on information versus interpretation. And I was very naive to this when I first came into the business world. I mentioned on the previous podcast that I sat as an executive assistant to the CFO while I learned the business, while I learned what the P&L meant, when I learned about what the balance sheet meant. But one of my first initial thoughts was, wow, we just sold $100,000 worth of product. That's amazing. We're doing so well. And I think a lot of people within the business realm, whether it be salespeople, whether it be marketing people that may be less tenured in their career, think that way too. Wow, we just made a lot. How come I'm not getting a raise? How come I'm not getting a bonus? But what we're missing is the information. We're interpreting that we're doing so well as a business. How come we're not getting more from it? We're missing the information that of that 100,000, 50,000 was it for cost of goods sold, which is just purely for the materials, labor, production, etc. And then there was a cost for payroll. There was a cost for the utilities. There was a cost for all of those hidden little things that we don't realize that have to happen in order for the business to run. And so, speaking to those listeners that may be coming to us with some of those big dreams that we had, I think understanding the difference between information and interpretation is going to be very important as they excel throughout their career too. With that said, I want to talk about fixing the book, something that I see a lot within my firm, and I don't think I clearly expressed this or that we clearly expressed this in the previous podcast that you work separate of me. I own my own accounting firm. We do everything from bookkeeping to fractional CFO work, and we can get into the meat and potatoes of that in a different episode. But you work separately in a different industry for an actual corporation. So I am a business owner, entrepreneur, building this accounting finance business, and you work within a corporation as their CFO. We do not work in the same company. But something that I see a lot with business owners or new clients is I just need my books to be fixed. And fixed doesn't mean that it's going to fix the misaligned decisions. A lot of times when I get into cleaning those books up, or when my controllers or bookkeepers get into cleaning those books up, yes, we can fix categorizations. We can make sure that transactions are happening on the correct financial statement. Like we said, I see so often small business owners that start their own business thinking, I'm saving time, I'm saving money by doing the books myself. But then I find there are expenses on the balance sheet, or, they have a, a, a loan that they paid that they put on the P&L as an expense. And what I find when I start cleaning up some of those things on their financials is that there are misaligned decisions. And what I mean by that is when everything is in perfect harmony within all of your financials, knowing your numbers on a 40,000 foot level is super important in understanding revenues that are important, right? Every dollar in is not a good dollar. And sometimes some of those dollars in actually cost us $2 instead of only 50 cents. And so if business owners are only fixated on every dollar that I can possibly get into the building needs to come in, that is a misaligned mindset that I typically don't like to work with, because they are just looking at that top line. They're not looking at what it's actually doing to the bottom. And one of the biggest questions that I ask in these situations is, if you had two businesses side by side, one was $1 million top line revenue and they had $100,000 in bottom line revenue, and you had a 500,000 top line revenue business and 100,000 bottom line profit, what business are you going to purchase if you're coming in to purchase them? A or B? You're looking at profit margins, you're looking at what's left over. And while both of them are the same net profit at the bottom, the margins are significantly different. And one was significantly more efficient with less top line. So they know what to do. And you can see that through expenses. You can see that with the way business owners carry debt. If I just take out this loan and get through this next payroll cycle, we're going to be smooth sailing. And so I think that it's important for business owners, business leaders to know that what we're talking about goes way beyond fixing the books. You have to have leaders and business owners that are aligned on effective decision making, not only for the financials, but for the businesses. What are your thoughts on that?
This brings me to a memory of mine of working for a business where the business had scaled. It started out with 4 people initially, and in construction, and then business was doing well, so they grew. They doubled. Now there were 8 people doing the same thing, and I remember Steve always asking me, why is it that I'm looking at our financials and we have now twice the talent force, and we still have the same amount of cash and the same amount of profitability that we're bringing in. He's like, make it make sense. And this is where we would then drill into how each job is performing, and that there are um, you know uh, more doesn't always mean better. There was one job that was taking up almost all of our resources because, we were so excited celebrating. We landed this gigantic job, and then it took all the installers off of
Mhm.
all the available installers, and all resources, all cash is getting pumped into this project. And oh shit, we find out on top of that that it was not it was not bid correctly, a whole section was left off from the bid. So we already know going in that this is going to be a loser because there change orders. Yes, they do happen, but there has to be the reason can't be, oh, we forgot to include this part in the bid. And so this is where we drill into, is the job worth tackling? Do we have all of the appropriate resources? Can we still perform on all of our other jobs, or is it sucking everybody into this one vacuum, and it's taking up all of the resources? And again, when the job is not performing well, you really have to make sure that each job is running profitably in order for the overall bottom line to be profitable as well.
Yeah, I think that speaks to that rogue kind of mindset. When you don't know your numbers or you don't know projects, you start to act really reactive, right? Like if we just throw a little bit more at marketing, we'll be able to recoup what we lost. Or, if we cut a corner here, we can make it profitable. Or, we're looking at this loser, but we've got a winner over here. They're going to equal each other out. You start to make these really reactive decisions instead of understanding it through the process. And if we look at that, that project as a long game, if you are following it along each step of the way instead of, that cookie cutter box or very segmented, then you start to be able to make really proactive decisions, right? Like if your foreman is coming to you saying, we can go back to the pool situation. When they were doing the excavating, they hit part of the stucco on our house. And I'm not paying for that, right? Like you effed up my stucco, you're going to pay for that. And so they had to go back and figure out, right? Like we're going to now have to fix this. We're going to add this in. We can't charge her for it. We also can't cut any corners. So how do we make this work? Had they waited until the very end to realize that loss, it probably would have been a lot bigger than it was. So they made tweaks, like, can we do the plaster of the pool with 3 people instead of 4 people and maybe cut labor? They have to start being a little bit more strategic in how do we save cost or recoup losses without sacrificing the quality of work. This segues into another kind of topic that you and I
Mhm.
we had discussed that we wanted to talk about going into this was, you know, founders crave certainty when business is inherently uncertain, which kind of speaks to what I just talked about. They when shit is hitting the fan, they want to dig in. Like, why are we not profitable? Why is payroll so much? And they start kind of nitpicking at, like, we've spent this much in marketing instead of knowing along the way. Like if things are good, I don't know of any founder or owner that I have worked with that is really digging in and massaging the financials when things are going well. But when things start to go a little sideways, they start to really dig into, why is our payroll so high? And they're not looking at, well, payroll's been pretty stagnant for the last 9 months. Or things like marketing. We've spent so much at marketing, but they're not accounting for the fact that we went to a trade show last month, which it costs a lot to go to a trade show, regardless what industry you're in. And so, can you speak a little bit to why you feel like this is the case within a lot of businesses, or some experiences that you've seen where founders or leaders are really leaning into wanting that certainty when things feel very uncertain?
I want to run back to the comment that you made about your pool and really bring that perspective into light, and to some of the underpreparedness that some business leaders are faced when things are uncertain, like somebody effing up your stocko. So the example is, back to the subcontracting industry, whether it's, flooring or insulation or any of these components of building whether it's a residential or a commercial building. The way that it works out there in real life is in order to build this building, it's not just one business building it. It's a lot of businesses being subcontracted under each other. So essentially, the client, which is the owner, or like let's say we're working with the college again. So the college owner, the president, whoever, the department that we're working with, they are the end client. And they really don't care to know who's working under whom. They are working with their general contractor. They are indicating their need. This is what I'm paying for. This is what I expect. And then that general contractor has this web of relationships of, this is my flooring subcontractor, this is my insulation subcontractor, this is electrician, and all of these different various components. And when absolutely anything falls through the cracks in this process, again, the owner doesn't care to know who's working under whom. All they know is there's a problem. So when they're assessing the progress, and which is typically on the monthly basis, they're kind of assessing how things are going. If they are walking the job and they find that somebody, whether made an error, or the design of the floor isn't in the direction that they wanted, or from big to small things, if there's any sort of component of displeasure, the client pauses their payment and they're like, you're going to fix this before I fork out the next set of payments. And so what does that mean for all of those subcontractors? That means that all of their pay gets stalled as well. And so this is where it really sucks to be that little fish in the at the very bottom of that pond, who is relying heavily, who can't pay their workers now because their payment has been stalled. And if it's stalled from the general contractor, then that means nobody down below is getting paid. And this is where a lot of that frustration, this is a lot of those, the examples of the thinking with the, what's the saying, making decisions with the fly seat of your pants.
Flying by the seat of your pants.
Yes, yes, doing
English
that.
is not her first language, guys. Be very graceful with her. She is so intelligent, but I know what she's saying. She just can't always get it out. But flying by the seat of your
These
pants.
Yes, yes, yes. Sayings are not my forte, but I love getting them wrong. But in any case, so yes, this is where these irrational decisions get made because the end or the end business is struggling now. They can't make payroll. They did not plan. It's yes, obviously you should operate with reserves, but reserves is kind of a luxury. You have to work to have reserves, and so most businesses are really operating with, well, how did I do last month? Because it's going to feed me this month. And so this is where it's really, really important to not lose control if if you're running several jobs at once, if there's, your business is constantly churning different clients and everything. It's very important to not lose sight of how each individual one is performing because they can have a substantial impact on your cash flow or your overall profitability.
Yeah, I think that's a really great way to put it. I mean, I love the contractor situation because there's so many fish in the fire and you see that trickle down effect. From the corporate side of things, I saw it all the time within the manufacturing side of things where you may have had a job that we took too long in production, or we saw a contaminated product that, being in the food industry, we couldn't then put out. We had to destroy it. So now not only are we taking a loss on material, but we have labor into it, and the production techs that are getting paid hourly, they don't care, right? They were there from 8 to 5. They expect to get paid from 8 to 5. But again, that's where those irrational decisions come from. In we didn't plan for material to have to be destroyed. We didn't plan for that. So that now that loss, like you said, is getting carried into somewhere else. We need to recoup it. Most businesses need to find ways to recoup losses because, to be completely honest, there are going to be situations in every single business that you take a loss on. If you're not taking a loss, I would love to meet you. But every business experiences these messy situations that you're inherently going to take a loss. How you react to that loss and how you get out of that loss is it says a lot about your character as not only a leader, as a business owner, but it's also how you get people to stand behind you in I'm going to follow confidently because you're going to lead us safely, or you elicit fear as a leader. And I think that's also really important for people to hear.
Now, Cash, what would you recommend for, we will all face uncertainties. No business can predict when that job will span out of control, when somebody will, take too long on the labor side of things. How can business owners prepare themselves for these what ifs so they don't have to react in a rash way?
That's a really good question. For me, one thing that I found is in that proposal stage, and I actually consulted you recently on a proposal that I put together, right? As a business owner, and I'm in the thick of this right now, building the business. As a business owner, you don't have a salary coming in, right? Like my income coming in is based on how well the business is doing, and it is not the same income every month, right? But my kids, they're a little bit like my employees, right? They don't care if I sold enough business. They want to eat tonight. And they don't care if we had hiccups within the business. They still want to go to soccer practice tomorrow afternoon. And so, as a business owner, I fight with this all the time. And I want to say yes to this. I just want to do it. And I find myself very quickly putting together proposals. And something that has really helped for me is slowing down a little bit, right? If I communicate to proposed clients, thank you for giving me all of the information, clearly defining what you're looking for, uh, preparing me with a scope of work so that I can clearly put together this proposal, and I'll have it to you by end of day X, or give me 3 to 5 business days. Now, I don't need to rush through to get this. What's going to happen is going to happen. But if I come to the table with a very clear outline of what they can expect from me, what I'm expecting from them, and it's very, I would say, like, bulletproof, the business is likely going to come because it's like Cash has her shit together, and she took her time to really think about what we heard. And so that's a really long-winded way to say, when before you say yes to any project in any industry that you're in, really sit down and assess it. Assess the things that can go wrong. Assess the things that can go really well. Assess where there may be bottlenecks. You can call it a SWOT analysis. So assess where your strengths are, your weaknesses, your opportunities. And when you can sit with that, you are already ahead of the game. You plan. You know, well, if my excavator blows through her stucco, I've got a little bit of a buffer in here, right? So I think planning is the answer that I would give in this. Really plan for those and don't rush for the sale of anything, whether it's internally or externally. Really go through that process. And going back to conversations that we had on the last episode, relationships matter. Ask your stakeholders, right? And so in your case of the general contractor, talk with the general contractor, talk with those subs, and really understand from the top down what is what is needed for this, right? What does the electrician need to do? What does the plumber need to do? And what could go wrong in each of those situations? Because when you don't have a plan, you should plan to fail.
You touched on several points, several golden nuggets there that I want to elaborate on. I could not agree more that it all starts in that planning phase, the bid phase, before you sign up for anything. You really have to understand, what the job entails. And you touched on it precisely. What can go wrong? And obviously, we can't predict everything that's going to go wrong, but having a buffer, a contingency buffer within your budget is absolutely vital, because something will go wrong, or something will turn out to be not as you expected it. And you will want to, there are certain things that maybe the client will ask on top that you weren't planning on, but you really want to make them happy, and you're within budget. You can throw in a freebie because you accounted for it. Or, if shit hits the fan, and you have to work on a project a week longer than you anticipated, you really need to have that buffer. So I absolutely agree with that planning phase. And also to touch on the actually talking with the installers and understanding, the components involved, your cost of services sold. You really need to have them be on the same page. You can't, just because you thought of a wonderful plan on paper, how do you translate it to them? How do they understand how to carry out your vision? And one of my clients in insulation is just so good about understanding that, on this report, on this P&L, when it's telling him that his gross profitability is not able to sustain his overhead, he understands, okay, what are our levers here to get that gross profitability to feed overhead? Well, we need to put, as he loves to call it, what levers do we push, And the levers of gross profitability are, either revenues a component, revenues minus your direct expenses is your gross profitability. So there are two ways you can look at it. You can either increase your prices, get your revenue up, or you could be more efficient with your costs, the cost that it takes to bring that revenue. And so he understands this concept to such, he's like, I want, give me an everyday practice where I can take those levers and communicate them to my installers. And so where that translates is, he's very diligent about printing out work orders for each installer, going over, hey, this is the budget of time that you have. You cannot go over it. Okay, we're adding a second person to your team. That means you've got to, now you don't have 4 hours anymore. Now you guys have to get them done in two. So having that communication is very, very important for the ones on the ground to execute your dream, if you will. You need to have that conversation, and to make sure that everybody involved in bringing that revenue to fruition understands the impacts where where they might delay the process.
I think that's so beautifully said, and it can also expand into every industry and every business, right? I talked about this again in the first episode about I had to drop my ego. My first shit sandwich was being told that I was a bad leader. And in that, I had learned bring people to the table, because just because you are seated at the table or you're leading a department, leading a company, you don't know everything. And the minute you realize that you are not the smartest person in the room becomes the day that you are the most powerful person in the room. And so what I mean by that is if you are in the corporate world and you have a customer coming to you with a need, or you have a project within your own company, ask all of the stakeholders, right? What is marketing going to do? What is sales going to do? How does this affect procurement? How does this affect operations? Because likely, if you are me, 100% of the time, you are not going to account for something, and not accounting for something leads to the failure or that potential loss. So please, please, if you are a stakeholder in any business, or you have the the seat at the table to make those big decisions, elicit the help of everyone that is going to be involved because they are going to give you the pieces that you will forget about. And not only will you get those pieces to make it a more successful project, you will gain a lot of rapport and trust with your team, building a lot of confidence and support for yourself with that team.
One other component that I wanted to bring in kind of getting prepared for the unknown, um, which a lot of businesses do practice, but not all of them do. But when there is that uncertainty, and you will have to spend resources to bring, your service or product forward, absolutely collect an upfront deposit. So you are not, um, when things do break down in that chain, you are not impacted by all of those outside factors. You don't want to dip into your own resources to start any jobs. You want to make sure that your client has a burden of that risk as well. So when you're getting prepared to start the job, order the materials and prep the job, you never want to use your own resources. So if you don't already have this implemented in your pricing agreements, this is very standard and a very good way to kind of spread that risk over and collect the money up front.
And for those of you that don't do this already, in a lot of industries, it's a very interchangeable word, but this could be called a deposit, a down payment, a retainer. There's a lot of different types of words for it. And what I see predominantly is that that down payment then goes to the project, that the company's
Yes.
not just recouping this, but it is a standard practice throughout a lot of industries. Great point. So I think that we have given our listeners a lot in this episode to digest and think on and chew on. So I think we should probably start to land the plane. Do you agree?
I agree, my friend. Um,
So, if there's a reframe I want people to walk away with, it's this: the balance sheet isn't a scoreboard, it's a snapshot. It's not grading you, it's showing you where things are right now. When you stop asking, what's wrong with my numbers, and start asking, what are my numbers responding to, everything changes. Because clarity doesn't come from the perfect reports, it comes from understanding what the reports are pointing towards.
and from a human perspective, this is where permission matters. Permission to be in a transition, permission to admit that something needs to change, and permission to stop pretending that clarity should feel comfortable. Discomfort doesn't mean you're failing, it often means you're paying attention. And when you stop fighting the numbers, you can start using them as support instead of proof that something is wrong with you.
So if you take one thing from today, let it be this: the financials aren't the problem, they're not the villain, and it's definitely not a judgment of you as a leader. It's information, neutral, honest, and incredibly useful. If you're willing to listen to it without fear, going past the balance sheet means asking better questions, not harsher ones. See you on the next episode.